I'm often asked, what is an FHA loan? Today, we'll answer that question. I'll also share some of the pros and cons of an FHA loan, credit scores for FHA loans, and loan requirements for an FHA loan. So stay with me and prepare to learn a lot about FHA loans. First, let's start with what is an FHA loan. FHA has been around since 1934. This is a home loan that is backed by the federal government. It comes through the Federal Housing Administration, backed by HUD, which is the Department of Housing and Urban Development. FHA loans can be used for purchase, FHA streamline refinance, or FHA cash out refinance. Let me start by saying the loan strategy that makes sense for you is going to differ based on your particular situation. Credit, income, the type of job, and life events all go into the makeup of which loan program is best for you. Okay, some pros about an FHA loan. One benefit to an FHA loan is the low down payment, as low as 3.5%. It's also very user-friendly from a credit scoring standpoint, and the credit score isn't necessarily going to drive the interest rate or the cost of the mortgage insurance on an FHA loan. So this is very, very unique just to FHA. Conventional loans are completely different when it comes to credit score and the impact to interest rate and the cost of mortgage insurance. If you've had life happen, such as a bankruptcy, a short sale, or a foreclosure somewhere in your past, FHA is a much more user-friendly program with regard to the waiting period guidelines, and they really do want to know the story. A con when it comes to an FHA loan is the mortgage insurance. FHA does require mortgage insurance on two levels. One, FHA is going to charge an upfront mortgage insurance fee of 1.75% that's financed into the loan, and FHA is going to charge an annual mortgage insurance premium that is paid monthly as part of your mortgage payment. FHA mortgage insurance is on the loan for the life of the loan unless you're putting 10% or more down. The other thing to consider with FHA is it doesn't matter how much you're putting down. The mortgage insurance on an FHA loan stays on the loan for the life of the loan on a 30-year amortized loan. If you're putting 10% down or more, then it will drop off in 11 years. So it just works completely different when compared to a conventional loan. However, keep in mind that it's the mortgage insurance that is allowing for the low down payment. So many people would not even be able to get into a home if it wasn't for the mortgage insurance and an FHA loan. Another thing to keep in mind with FHA is that the loan limit is lower when it comes to FHA than a conventional home loan. Loan limits do change typically every year, so be sure to check with your lender for the current loan limit on FHA in your community. FHA is a great program and we certainly utilize it a lot, but keep in mind it's specific to one's particulars. So it may be the best option or it may not be the best option, and that's where a great lender comes into play. You may be wondering, who can apply for an FHA loan? Essentially, anyone 18 years or older can apply for an FHA loan. Again, what will drive whether an FHA loan is going to be the best loan for you is really going to depend on your particular situation. We do use FHA loans for first-time home buyers very often. FHA loans are not specifically for first-time home buyers though. They can be used for first-time home buyers or repeat home buyers. It really just comes down to your credit profile, your particular scenario. I know I keep saying that, but honestly, it's the truth. A lot goes into what a home lender does, and a strategy honestly is a big part of what a great lender can bring to you. There's a lot going on in one person's life, and every person has a different footprint. What an experienced lender does is listen and observe what's going on in your particular credit profile, loan application, etc. So we can put together a strategy that helps you achieve your goals. Let's talk for a minute about credit score requirements. First, note that FHA loans generally will go down to a 580 credit score. However, that doesn't mean every lender across the country is going to lend down to a 580 credit score. So realize that lenders are going to decide what their FHA minimum credit score is, and it's not a black and white type of line in the sand scenario. Also, keep in mind that it's not just about the credit score, but also the credit profile. You may have a score that fits with the loan guidelines for an FHA loan, but maybe the credit profile, meaning what's actually going on in your credit, could prevent you from getting an FHA loan. For example, disputed accounts. When someone disputes a credit account, it actually is going to freeze that account from being reported into the credit score until that dispute is resolved. So, If from an underwriting standpoint, when the underwriter is reviewing the credit profile, if there's something going on that's concerning that doesn't meet FHA's loan requirements, that could be a reason why someone would not qualify for an FHA loan. But even though the credit score might fit within the FHA loan credit score parameters, so it's kind of a two-step process. Another example could be maybe the credit score fits for FHA loan requirements, but maybe there have been late payments in that last 12 months. That's another kind of scenario where, great, the credit score fits, but the credit profile itself has something in it that puts somebody in a position that they may not be able to qualify in that time frame. So the credit score is important, but the credit profile is just as important. Other loan requirements for an FHA loan. FHA loans are full income documentation loans, so having the required income that meets the lending guidelines is going to be important. The other thing is the appraisal. For an FHA loan, there are certain health and safety guidelines that appraisers have to follow for FHA loans. So no broken windows, exposed wires, anything that becomes a health and safety issue could be called out on the FHA appraisal, and the appraisal would be subject to those items being repaired. So that's something that's very unique to an FHA loan. Also, properties that are being flipped. So this is a really big deal, especially in markets where investors are coming in and buying property. Investors buying properties, they rehabilitate them, and then they want to list them for sale. So if the property flipper hasn't owned the home for more than 90 days from when they actually purchased the property, then the buyer will not be able to use FHA financing on that particular scenario until after the seller has owned the property for 90 days. So no property flips less than 90 days of the seller owning the property on an FHA loan. So now you know all about FHA loans. I have a true passion for home loan education, so please subscribe and join our community. If you got value out of today's video, please give it a like, and if you have any questions, be sure to leave a comment below. We'll see you next time.